Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Wednesday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today is a big day because the Fed is going to make their rate decision announcement, and more importantly, are going to release their next dot plot. So first, what is the Fed dot plot? The dot plot is released quarterly at the Fed meeting where they announce their rate decision. And it basically is a projection for the next 3 years in terms of rate movement, whether they think the Fed funding rate is going to be moved up or down, stay the same, and economic indicators like inflation, GDP, unemployment, things like that. So the significance of the dot plot is, in terms of mortgage rates, the biggest thing that moves the needle is expected inflation. So the Fed members are going to vote on what they think is going to happen with inflation over the next few years. And I think even more than normal, this dot plot is going to be significant because I'd expect some major changes from the last dot plot. Back in September, the Fed released their last dot plot expecting 100 basis points worth of rate cuts. And if the Fed does cut a quarter point at this meeting, which is what the market expects, then we will have gotten that. However, the Fed also projected another 100 points in rate cuts in 2025. That's the thing that I would expect to change. If you saw my last video, I talked about how basically all the economic indicators that the Fed projects in their dot plot have come in hotter than they expected. We have hotter inflation than expected, lower unemployment, higher GDP. So all that leads to less rate cuts in the future. And I don't think the Fed is going to pause at this meeting because the market is fully expecting a rate cut. And the Fed members know that doing a rate pause when the market is fully expecting a cut would be really harmful and really shake things up. But I would expect them to change their projections moving forward in their dot plot. And I think that depending on those projections, that is going to swing things either in a positive or negative way for mortgage rates more than the rate decision itself. So as of right now, market is expecting a rate cut today and then most likely another 50 points in rate cuts in 2025. Now it's very far from a consensus, as is usually the case when it's a year out projection wise. However, it's still noteworthy that this is a lot less than the Fed had projected in their last dot plot. So what I would expect is if we get a Fed dot plot with more rate cuts than 2, or even if we're split between 2 and 3 rate cuts, because keep in mind, it's not just Fed members determine universally that they're going to project 3 rate cuts in 2025. It's not like the actual rate decision where it is, universally decided, pause, cut this much, hike this much. It is each member's opinion. There's 19 voting members. So you might have pretty even split of like 10 people that think they're going to cut 3 times next year and 9 people that think 2 times. But something like that would probably be positive because the market is expecting most likely 2 cuts. On the other hand, where the majority of the Fed members are projecting either 0 cuts in 2025 or 1 cut, that would be a negative to mortgage rates. As always, if you have any questions or comments, shoot them below or feel free to call, text, or email me. But thanks for tuning into this video, and I will see you next time.